Hey traders, welcome to another video. Hopefully you're having a beautiful Monday morning. In this video, we'll talk a little bit about DeFi. We'll dive into kind of understanding what new DEXs or decentralized exchanges are available on the Solana network. And we'll talk a little bit about three particular ones that we're looking at, and then one specifically that I think is pretty unique, has a interesting order book system or a matching system that is different from basically every other decentralized exchange that we've seen. So we'll talk a little bit about that. You can basically purchase these coins, in my opinion, at a significant discount, and in terms of market cap, in terms of TLV or market cap compared to TLV. So a lot of things surrounding the DeFi space. And then we're going to end off the video actually looking at the bond market, because it does look like we are basically completing the squeeze and we are breaking out soon. And if the bond market is going to look pretty weak, pretty risk off, that is going to impact the cryptocurrency market. We could see a bigger dip than we are expecting. And although we are long-term bullish, it could be a little bit of a concern for people who have a lot of exposure for risk on assets, or if they're using leverage. So thank you very much for tuning in. Today is the 13th of September, 2021. And let's jump right into it. So first thing, we want to just talk a little bit about the increase in the usability of DEXs, like in terms of the functionalities, in terms of the UI, the UX, just the ease of actually navigating a decentralized exchange. And we have seen the volume for decentralized exchanges significantly ramp up. It has consolidated a little bit. We saw the peak at around September 2020, which is kind of surprising, because the crazy meme coin market was around, let's say, May, April, March, somewhere around there of 2021. So kind of interesting to see a dip in the overall DEX volume when you saw the peak in meme coin market. But nonetheless, you are seeing it stabilize. So I do think that the use of decentralized exchanges is going to increase in the future. So we'll definitely see if that plays out, and the next page will give you a lot more clarity as to the BSC, the Binance Smart Chain DEXs, as well as the Solana DEXs. So I'm using this particular website. It's called KingDeFi.io. I will touch on this before we jump into the charts on TradingView. There's a pretty significant staking return that they have on their token, but we're first going to look at the Binance Smart Chain network here, the BSC. Right now we have a total value locked in the entire ecosystem of around 24 billion for the Binance Smart Chain network, as we can see. And then within the really last 30 days, we haven't seen that much, but still a significant amount. And compare that to Solana at around just 11 billion. You see that Solana has more than double to go before it even catches up to the Binance Smart Chain network. And that's not looking at Ethereum and their whole ecosystem. So it's pretty sizable, the area or coverage that we need to cover in order to actually get to the same level as something like Ethereum with Uni. And if we're looking at the Binance Smart Chain projects that are DEXs, PancakeSwap definitely wins this battle. We see Bakery Swap, Alpha.finance, Venus, MDEX, but the main one holding 69% of the market cap for the Binance Smart Chain ecosystem is going to be PancakeSwap. And if you don't know, PancakeSwap has a phenomenal auto staking system that you can stake basically any amount of cake you want, and right now I think the APY is around 85 to 88%, something around there. But it is a very efficient, easy way to just put a little bit of money in, put a lot of money in, and it grows over time, pays you every single day, and it's a really great way to make passive income. If you don't know, definitely worth checking out. And with PancakeSwap, we have a total value locked. This is a total amount of value within the decentralized exchange of PancakeSwap of around $10 billion. The second highest, Venus, is sitting at $3 billion. So PancakeSwap is the dominant leader in the Binance Smart Chain network for decentralized exchanges. We have a TLV ratio, which is the market cap divided by the TLV, around 85%. Now, ideally, we want to see this number, the market cap divided by the TLV, as small as possible. So we'll see on Uniswap, it's close to 300%. So it's pretty overvalued, but it makes sense because it was the first main explosive decentralized exchange that came out. And then after, you came up with all these different ones, but it was the main leader of the decentralized exchange movement, or the DeFi movement. So a lot of capital has been flowing there because it is the most prominent, it's the longest lasting, kind of like how BTC is the longest lasting, so a lot of liquidity is there. Same thing with Uniswap. And then you see the smaller market cap and smaller altcoin, yes, less used tokens are going to see a lower percentage, which is kind of viewing it as a better purchase in terms of the value for the market cap against the total value locked. But kind of doesn't make sense to not go with the market leader. Sometimes I still view PancakeSwap as the main market leader for the Binance Smart Chain. Now, talking a little bit about the Solana network, like we said, it still has double the amount of room to go because it's 11 billion and the BSC is at 24 billion just to hit the same as the Binance Smart Chain. It's a little bit more spread out in terms of the main dominant decentralized exchange. Saber actually comes out on top. We'll take a look at that one. Anchor Protocol is next. We will not take a look at that one. I believe Terra is also behind the Anchor Protocol, which is behind also Luna, a project that we've been talking about on our Discord. Really interesting. They have like M assets, which replicate really any asset or like currency or really anything in the world, as well as they have their stable coins that they're rolling out, which is pretty phenomenal. A lot of interesting projects and really interesting things coming out of Terra, which is, I believe, a part or just basically a sole helper or assistant, or basically even a contributor of the Anchor Protocol. But we also see Radium, which we'll also look at, which is taking less of a market share than a lot of what Saber or Anchor Protocol is. And then the last one we'll take a look at is Serum, which I think is a very interesting decentralized exchange. And Serum is the only decentralized exchange that has a order book matching system, and we'll take a look at that a little bit later. But we can see it's kind of a race for market cap and dominance within the Solana network for DEXs. And our view is that Serum will slowly climb up. They already have the backing from FTX, which is a very up-and-coming cryptocurrency centralized exchange. We see Binance, which is obviously behind the BSC, kind of have that same sort of momentum back in 2017, 2018. They got a lot of traction, and now they're the big players internationally. And we see the underdog, which is FTX, basically eating the market cap of Binance because they are unable to grow beyond what they are right now because of regulations, rules, restrictions, and it is taking a tremendous amount of capital to push into new areas and new territories, I'm sure, compared to FTX, which is just groundbreaking in terms of their platform. But then if Binance already has uncovered the regulations and restrictions, FTX doesn't have to go through all the hoops, or at least nearly as much. So you're seeing like the main Binance, I guess you could say like the ship pressing forward in the crypto realm, and then FTX is just being able to go behind it and just ramp up so much quicker because Binance is taking a lot of the front load work. So in short, FTX is moving aggressively and taking a lot of the market share that Binance initially had. So we'll talk a little bit about the different DEXs. We'll first look at Uniswap and Ethereum, because that was the first main big break for the DEX. I'm going to get a little drink of coffee, and then we'll talk about the large market cap to TLV, which is just under 3 here. All right. So what this represents is the total market cap of the project divided by the total value locked, and this gives us a ratio. The lower the ratio, the better it is, because there is a lot of value within the actual project, but if the market cap is low, you're buying something undervalued. That's the simple premise there. And if the market cap is very high and there's not a lot of total value locked, then you're kind of overvaluing what the actual project is managing or what it's able to handle or it's currently handling. So ideally you want to see a lower ratio for the market cap divided by the total value locked. And we see that it's pretty bloated. 3 is quite high. You don't really see it above 1 too much. Like PancakeSwap's a pretty round, solid number of 0.8. And you see the smaller market cap tokens have a smaller MC divided by TVL ratio because they're more speculative. They don't have as much locked in the in terms of the project. So ideally, you're looking to have a good relationship between the market cap divided by the TLV as well as the progression of the project. So this is very, very established. You're going to get a very high ratio, but it's already established. What we're looking for is the next big explosive push to the upside where you're going to get your 10x, your 12x, your 20, 30, whatever the case may be, right? So you see a lot of these DEXs look very similar. Uniswap, basically just put in what you are looking to sell and just put in what you're looking to buy. Elongate is on BNB. You literally type in whatever you want, Aave, AMP, whatever you'd like, and then you can just trade it really easy. Just connect your wallet, and there you go. You can see your pools. You can see the chart of whatever you're looking at there. But really, it's pretty simple in terms of its functionalities. Next thing, we have PancakeSwap. It does have more functionalities. I do have a pretty good amount of capital there in PancakeSwap, and it has a little bit more functionality. I really like the farm and pool. We can see you could hold your stablecoin in here. So let's do BUSD with TUSD. Let's just try to find it here. I guess there's only 2 of them. And it is not here, but anyways, they do have one. I guess I could do BUSD versus BNB. Oh, I guess they took it down, but they did have a stablecoin one where it was BUSD, TUSD, and that was a stablecoin pair, and it was around 8-9% in terms of the APY. So you are able to get stablecoin returns that beat inflation in terms of the inflation numbers that the government's coming out with. But it does have more functionality, and what I really like is the auto cake farm right here. Let's see what the percentage is. It's around 85%. As we can see, it is an extremely passive way to make cake. Definitely highly suggested there for the syrup rule. Now we're going to looking a little bit in the PancakeSwap's TLV. We can see it's around 0.83, a lot healthier than Uniswap's just under 3. So we can see that this is getting into a healthier value of market cap versus the total value locked. Radium, we can see it's a smaller market cap token. It has less in the total value locked. So you're going to have around a 0.6 ratio of the MC divided by TVL ratio. And this is kind of similar in terms of the overall look. You can see there are pools where you're able to put in a capital for these 2 pairs, and you're able to generate a certain amount of interest. And the swap looks very similar. You just put in what you want to sell and put in what you want to buy, and then connect the wallet and make the transaction. Pretty simple. Saber has the largest total value locked, as we can see right here in the Solana one. Oh, that's not. Let's go into BSC. This should change here. There we go. It has around $10 billion. Oh, that's not... we've got to make it back to... There we go. Don't know why it is not in order. There we go. Awesome. So it's around like $4 billion in total value locked for Saber. We see Radium at around 1.6 billion, and then Serum at only 638 million. So really, Serum has a lot of climbing to go, and I think that's why this is going to be, or this is our pick in terms of the Solana Network DEXs. Serum is the one that we're looking at as a potential winner, or one of the top 3 that is going to jump in terms of the total value locked compared to like Solfarm or Radium. Haven't taken a look at Anchor Protocol too much, or even Saber I have taken a look at, but I think Serum will definitely jump a few spots there. We can see the different total value locked amounts for the different projects. So that is Radium around 0.6. And then Saber, like we did say, has a total value locked more than any other Solana Network decentralized exchange. It doesn't say the percentage of the TLV. Maybe it says it right here, which it does. Perfect. So Saber has around 2.77, which is a phenomenal percentage. It's an extremely low. That's what we're looking for. Serum is a lot higher, so ideally that's not what you're looking for, but we still value Serum as an extremely good investment because of this very unique market, or I guess order book matching technology, protocol, whatever you want to call it, that they've been able to implement. And we'll talk about that a little bit later. We can see Serum is the next one that we're going to talk about, and it has a market cap divided by total value locked around 0.88, which is different than what we saw right here, I believe. Yeah, or a little bit different. Not too different. So this is going to be the interest one that we're going to be looking at a little bit deeper into the actual platform itself. Currently it's around $11. If this, I believe, let's just take a quick look here. I wrote it down here. If Serum is able to basically tie with a project we're already looking at, we can see it right here. If SRM gets to a similar size as PancakeSwap, it'll be 8x from where it is today, so from $11 to around $88. If it gets to Uni's size, market cap around $13 billion, it'll be around 25x from where it currently is today. So it has a ton of growth potential, and the reason why we think that this is a lot of room for growth is it creates a similar system or platform where you have the centralized exchanges having order books that match a buyer and a seller. We can see in here, Serum is a decentralized exchange and ecosystem that brings unload transactions. This is the line right here. Serum is the only high-performant DEX designed around a fully on-chain central limit order book and matching engine. Ecosystem partner can compose of Serum's on-chain order book to share liquidity and power their trading features for institutional and retail users. So the fully on-chain central limit order book and matching engine. That is the key thing that I think is going to make Serum or SRM, the token, beat the other competitors in the market for the different dexes on the Solana network. And we can see within the actual platform, it's totally different compared to Radium or even PancakeSwap or Uniswap. You can see they all look very similar, right? You just put your asset you want to sell, what you want to buy, asset you want to sell, you want to buy, really exactly the same. And then you see SRM, totally different. This looks very similar to an FTX or a Binance or a Coinbase Pro or even like a Bittrex or Beefy.finance. All of them are very similar in how it is structured with the order book. You have the buy and sell. You can look at your entries and exits in your trade. In this area, you have recent market trades right here. So in my view, this is where people are going to go because this is what people want. There's more information present here, and who doesn't want that? I like seeing the different orders coming in and the different, basically the different, individuals between the both bears and bulls contributing their part to create liquidity in the market. It's just, to me, interesting. You can kind of see if you're looking at a very short-term price action, which I think Solana will be favorable for because of the extremely low transaction fees. This is extremely relevant information to see the asks and the bids. It gives you a little bit more understanding of supply and demand. Totally different. You see a chart here. You can change your asset. This is a trading view embedded chart, which is really useful. No other DEX has this. You don't see it on Saber, you don't see it on Radium, you don't see it on PancakeSwap, you don't see it on Uniswap. This is the only decentralized exchange that has this structure, and I think that's why a lot of investors, traders are going to flock to Serum because they have a very unique platform which allows you to have a better understanding of the overall market, gives you more information, more data, not only about the market, but also about your personal account, which is very useful. They're also backed by FTX. You can see you can get other tokens from FTX, which is, like I said, a very significant centralized exchange that is only growing from here. So in short, we are very bullish on Serum and slowly dollar cost averaging into their token. Next thing we're going to talk about before we jump into the charts is this particular project right here, KingDeFi. It's pretty interesting. I just threw a little bit of basically like, what do you really call it? House money, I guess. Profits from other trades that I use in more speculative plays that could potentially generate significant returns, but could also absolutely go flop and just basically go nowhere. So I'm very accepting of whatever happens to this capital. But I did put a little bit of a bag in their token. We can see KingDeFi has a token, KRW. It's on Beefy.finance. If you are using like Trust Wallet or anything like that, you'll be able to connect to it pretty easily within the app section, the D app section there. And it has a really good APY, around 1.2K APY, daily percentage around 0.7%, and has a total value locked around over $1 million. So it's not like it's an extremely small token that just is like, look at this one. This is $32,000 in the total value locked. That's really, really not a lot. 25 grand, you see 3 grand. So it actually has some backing behind it, 1.3 million. That's not so bad. And even if it doesn't go up a tremendous amount, I just kind of like the fact that I'm making pretty good money just from holding it. So it's on Beefy.finance. Definitely check that out if you are interested. And they have a pretty interesting platform, which I think more people use as DEX has become just overall more and more popular, as we can see the trend is already showing. So now that we talked about that, this is Serum right here. We'll now jump right into the US equity market, as well as the US bond market, because they have been kind of faltering a little bit. We'll touch on the S&P right now. It is pulling back to a major level of support, which is around that 4470-ish level. We can see this guy right here, previous head of the Head and Shoulders, as well as it tested for support, and it's coming back to that same level of support. It is pulling back, forming a nice expansionary wedge formation, which in my view is a little bit of a bottoming formation right here. Overall, expanding wedge formations at a low is a bottoming formation, and the fact that we're seeing lots of buy volume coming in, holding this key zone, is an indication that we are going to be seeing yet another recovery from the traditional markets, because we've seen recoveries time and time again around this dotted ascending level of support. That's just continuing to hold the price, making higher highs. We got a little bit of a breakout from the ascending resistance zone. So there was a point where I did think that we were going to break to the upside, but we were unable to get the buyers to step into the market. We got a little bit of a tumble. We saw an expansion in the volatility to the downside. It does look like we have bottomed here, and we are slowly making our way up. But it's always good to look at different equities within the market, not just one index. Before we jump into the NASDAQ, this is the volatility index for the S&P. We really like to take a look at volatility, because that is something that is a very great tool to use in my view, especially when you're looking at price action. So in terms of the volatility, what we're looking for ideally, if we are going to be seeing a recovery within the S&P, is we will see the volatility index slowly drop, continuing to enter deeper and deeper into this this descending wedge. So if we're going to take a look at what potentially could be playing out, ideally we're looking for something along the lines of this, where you're just going to get a nice little bit of sloppy action, but ideally you're looking to get just a nice steady fall towards a lower low for the volatility index. And if that's the case, you'll see the S&P continue to hold the higher low, and it'll slowly rally along like this. If the VIX, the volatility index for the S&P, does start to spike, like if we're starting to see something along the lines of maybe like something like this, like you get a really significant pop off, you are well above the 20-ish range, 21, let's say 50 range, and you get a nice pullback validating the previous resistance. If you get like a setup similar to this, that could be a sign where we're seeing some trouble, we're seeing some fear, uncertainty, doubt in the market, and crypto will probably be not doing so hot. But as long as we're seeing the fall and just the descent continue for the VIX, it will be looking great for crypto. I think it's just a matter of time before we see a big bump, but if we are, because we're seeing a squeeze right now, if we are able to see a squeeze and then a push down, breaking this nice series of higher lows, and then it just falls, coming back down to make a lower low, that is going to be absolutely phenomenal for the cryptocurrency market, and it'll set up the rest of the bull run that we are anticipating that will take place for the rest of the year. The Nasdaq's looking really solid. It has broken above the key level of resistance here for this ascending wedge, breaking out of a less aggressive ascending wedge, as we can see. So it's just been making significant bullish pushes to the upside. Another continuation pattern, bullish push to the upside, and then we're seeing a pullback here to validate this previous key zone of resistance as a new level of support and confluence within our previous resistance zone, which is also acting as a new level of support. So it is at a key level of support here. If we go on to a smaller time frame, ideally we'd like to see a nice descending zone there connected by the lower highs. And then if we just take a quick draw using our draw tool, ideally we're seeing something like this, where you're seeing a recovery and then a resistance turning into a support within the key zone of resistance right there. You could also argue that that is a completion of a head and shoulders with the neckline right there. So then you get the size of the neck to the head, and then it's already hit target. So in my view, we've already completed the worry or the fearful push to the downside, and we're now recovering to climb back up and continue our overall bullish momentum to the upside. Until the central banks are going to raise rates, I do not think we will see a massive capitulation event to the downside. We'll need to see a significant amount of inflation impacting millions of people in order to get the Fed to actually take action to raise rates. They can talk about it all they want, but they're not actually going to be raising rates, and it's going to set a little bit of fear in the market when they are going to raise rates, but I don't think they can, because there's too many businesses that are depending on the cheap, easy money economy that we're currently in. So now that we've looked at the US equities as well as the volatility index, we'll now talk a little bit about the US bond market. All right. So what we're seeing on these three charts is we see the DYX, the DXY, which is the US dollar currency index. It's just basically the US dollar compared to the rest of the currencies. A lot of it is the euro, you get GBP, you get the yen, you get a bunch of different smaller currencies, but it's basically the US dollar against the rest of the currency market. Euro is taking a significant portion of it, so this is kind of like the Euro USD chart inverted, is kind of what you're seeing here. The next chart we'll take a look at is the actual value of the 20-year Treasury bond from the United States. Not the yield, but the actual value of the bond. And then the last chart we'll take a look at is the yield that that bond is generating. Now, there is a negative correlation between the value of the bond and the yield. If the bond prices are going up, yields are going down. If yields are going up, bond prices are going to be going down. So to start off with the US dollar index, we do see a potential double bottom here where you got that nice ascending wedge that did break. You're basically right at a pretty pivotal zone here. Let's take a quick picture using our tool, as we can see right here. And we can see this is a major level of resistance. We did get a little bit of a pop-up because you got a first attempt to try to break it right here. It failed, and it came for another attempt. It failed. It was able to break, but the sellers, because this is such a key zone of confluence, pushed the price right back down, and now it's retesting that same zone yet again. So you are seeing a continuational push making higher lows, but if it does inevitably fail, we could see a spill coming back down and the price coming back down to the zone here, which would be ideal because we are looking to see the US dollar weaken compared to the other major currencies, because the US dollar is the world reserve currency. If there's a ton of capital injecting into the US dollar, there's most likely a lot of fear, uncertainty, worry in the market, and that's not what we're looking for in the cryptocurrency market. We're looking for speculation, we're looking for hope, we're looking for optimism, and in order for that to occur, we'd ideally like to see this as a fake out, one massive fake out for the bullish individuals on the US dollar, and we're looking for this to be a potential head and shoulders formation where you get a left shoulder head, and then this is the right shoulder coming in, and then you're going to get a breakdown coming back down to this zone here. Maybe you could see like something along the lines of that, and then coming back here, and it could be a tightening formation then to inevitably push to the downside. But really what we're looking for is in our current structure to break. This current structure right here, let's just go one more. This is our current structure we're holding. We'd like to ideally see that break to the downside, and then the price trade somewhere within this area here, where we're going to be looking for another formation. Either we're going to be squeezing to the upside or squeezing to the downside, similar to what we saw right here. But in the short term, we're just looking to see the price go from where we currently are right now and then start to trend back down to around the 90s area, around 90.5 to 90s area. So that's going to be the current outlook for the US dollar. It's looking pretty favorable. As long as we're holding below 93, I think this right shoulder is going to form, and we are going to see that head and shoulders play out to the downside. All right. And if you're really unsure, we can quickly draw this head and shoulders. This would be the left shoulder. This is the head. And we can see the right shoulder lining up around 93.90. So that's going to be the overview of the head and shoulders. The next one is going to be the actual value of the bonds. We can see since around the time of COVID, we have seen the value of the bonds drop, which makes sense. No one wants to hold bonds if more speculative assets are going to be appreciating and making them money. So we have seen the value of the bonds drop during the time where Bitcoin fell from like 60K to 30K. There was some fear in the market. The S&P was a little bit shaky during some points. We saw the actual bonds, the prices of them increase. So you're seeing when there's fear in the market, capital flows into bonds. It's a negatively correlated relationship. So ideally what we're looking for, let's get our draw yet again, is we're looking to see a reversal for the US bonds. So this is a massive push. You see a very, very tight squeeze here. Let's get it around there. Around there. So that was a pretty big squeeze, and then it had a big solid push to the downside. And what we're seeing right now is a rejection of this major level of support. We saw it as a support even back like way back when. This was a major zone around 134, 135. So we got an initial bounce from this double bottom here, and ideally what we're looking for is this to be the top of the recovery, where you get the initial push, you get the pullback, and then you're going to be basically winding up to break this major zone, because this is such a significant zone. It's not going to just immediately break in an instant. It will take time. It will take a lot of pressure from the bears to break this around a 135 zone. So we got an initial attempt, could not make it. Initial attempt, could not make it. The sellers basically had to get out. The buyers took charge while there was fear within the market, as we saw right here. And now the sellers are stepping back in, and we are consolidating, contracting, and the goal here is for the price to not break the 155 zone right around here, and for us to contract and push back down into the sub 145 range, where we're going to be looking to see some price action, squeeze the price closer to the 134 zone, somewhere within this box here. So if we're going to take a smaller look at the price action here, really well respected all around. If we get our brush, we see first rejection, second rejection, third rejection, fourth rejection, fifth rejection for the resistance. So a ton of resistance there. And not only that, you also see a zone of confluence where you see key levels of support turn into new levels of resistance. So lots of supply at around that 151 zone for the US bonds, for the TLT here, for the 20-year Treasury bond ETF yield, or not yield, Treasury bond ETF, period. And then for the support, you see previous resistance becomes new level of support, 2, 3, 4. So lots of support squeezing the price closer to the apex, which is right around there, and it is really getting close to it. So I think we will see a break sooner or later. Even if we see a slight break to the upside here, I am looking at this zone to be a zone of confluence. So it could turn out to be a nice ascending zone like that. Could be a slight break, and then you're going to get a break to the downside. And once you start getting in this range here, that's where you're starting to look at potential risk on exposure. And once it breaks below this zone here and gets into this zone, that's where I'm just basically going all in on risk on, and I'm expecting things to really take a dive once it goes below that 145 zone there. So that's my view of the TLT and the relationship of TLT and the overall market that we're currently trading in. And the last thing we'll take a look at is the US 20-year government bond yields, which ideally will be moving to the upside. We have been seeing a slight hesitation for this to push to the upside, but we are seeing it slowly just recover here. Around 1.7% for the bond yield is the low, and we're currently seeing it on 1.8. Ideally, what we're looking for, if we just take a quick picture here, is we're looking for a contraction, and then before the massive break for Bitcoin, we're looking to see the price just slowly set up absolutely perfectly, where this is the around 2% range, and then you're seeing the higher lows. And simultaneously, what you're looking for is to see Bitcoin and basically the entire cryptocurrency market rise while you're seeing the bond yields rise at the same time. So ideally, crypto goes up, at the same time, bond yields go up. So what we're looking for is a structure very similar to this, where you get a nice squeeze from the higher lows, buyers coming in each time, as we can see, and then sellers are currently squeezing it right here, but I think we will get a little bit of a break coming back within this zone here, and this is going to be where it's looking very favorable, but we don't have confirmation of the break yet. And once we break the 2% range, then we'll have full confirmation. And after the 2% break, that's when we are going to be looking at maximum amount of exposure for risk on assets, and that would be crypto. So hopefully that was a useful understanding of US bonds, both looking at the prices as well as the yields, because I think that is something that many traders don't look at. Although it's not directly correlated, but it is pretty interesting to see the correlations if you do look at it enough. So I think a decision is going to be having to be made here sometime very soon for the overall market, which will impact the cryptocurrency market as well, in my view. So as of right now, we're remaining patient. Our bias is that the US bond prices will fall and bond yields will rise, and the US dollar will fall relative to the overall currency market globally. We think the S&P and NASDAQ will rise, and we think that the volatility index will fall. All that is creating a perfect environment for Bitcoin and the rest of the cryptocurrency market to rise. So hopefully that was a very helpful, informative, educational video. If you thought it was useful, it would mean a lot if we get a subscribe and a thumbs up, like a lot of YouTubers say. Smash the thumbs up button. It is much appreciated. Thank you very much for tuning in with me today, and until next time, have a good one, traders.